Right now, 4 out of 5 of my most reliable indicators are screaming that a major Bitcoin crash is coming, but the one indicator that has never been wrong is pointing to a massive pump to around $250,000. So what the hell is going on? Well, in this clip, pulled straight from a private live stream that I just did with my group, I'm gonna break down exactly what these conflicting signals mean, why we could see a big drop before the next big pump, and how you can prepare for it. This was the last bull market. We had a bit of a double top attempted run up after coming all the way back down, completing the M pattern, a bounce. We had like a little bit of a wedge here. We broke above it and then came back below, and that was the beginning of the bear market. I'm not saying that's what's going to happen this time, because there are some things that are different this time. As soon as it flips to gray, historically, that's been the beginning of the bear market. Now, if I go and put, for instance, the super guppy on, right when we came below, that is when the super guppy turned gray. We're below that. We're in that wedge. We wicked up into the super guppy, but we never got above it. Back here, it was right where the super guppy turned gray. We wicked back above the super guppy, but came back down, and that was the beginning of the bear market. Super guppy goes from green to gray. As soon as it flips to gray, historically, that's been the beginning of the bear market. Bull market top, reattempt, comes back down, guppy turns gray, bear market. Now that's a super guppy. So let me get rid of that. Let's look at the EMA ribbon. Very similar. Whenever we flip the EMA ribbon to the downside, in other words, we're above it, we're above it, we're above it in the bull market, we wicked below it, we came back above it, but as soon as we get below it and hold underneath it, it's the beginning of a bear market. Bull market, we get below it, hold as resistance, bear market, we get above it. We came below it here, but we got back above it. We didn't go under it. We just went through it here. Here we went under it, held as resistance, beginning of a bear market. And one more time, the current situation, we flipped it bearish here, and we have not gotten back above it. Same with the Gaussian channel. Let's go to the 5-day Gaussian channel. We get below the center line, it turns red, beginning of the bear market. We get below the center line, we retest the center line, turns red, bear market. Bull market top, we put down to the center line, we get below the center line, it turns red, beginning of the bear market. Here's the current situation. We wick to the center line, bounce. We go below it and below the whole thing, and it's just turned red. That's not good. On the daily time frame, whenever we have a death cross is when the green line crosses from above over the red line, it's the beginning of a bear market. And when the green line crosses back above the red market, that's a golden cross. That's the beginning of the bull market. And that's happened over and over and over again. And here we are with a cross. The green line crossed over. We did have this big drop. If this drops further, that could continue to follow it and drop until that finally happens. So we have a death cross, we have a super guppy turning gray, we have the EMA ribbons flipped, and we have the Gaussian channel turning red. All four of those things are bear market indicators. Here's the one outlier. The pi cycle cross is very strange. Pi cycle has always indicated a top. Whenever there was a cross, the green line and the red line cross, it was the top. Red line and the green line cross, it was the top. Red line, green line cross, it was the top. Red line, green line cross was the top of every other bull market top. This time, it has not crossed. Here was the bear market bottom in 2021. This whole thing is a bull market, and not once has it crossed. And not only that, it's not even close to it. So that could be an indication that the top is not in yet. But with all these other things showing bearish, what does that mean? That means that we could see big dumps first before pumping up to the top. And maybe the top is coming, but in the short term, all of these other indicators are indicating that we're going to drop. In order for us to get these two lines close together, this red line and the green line, in order to cross, it would probably be sometime in July or August. So what do we make of that? If 5 boxes have to be checked off and 4 are checked off for bearish, but 1 is not checked off, what the hell? Like, what do you do? Quick note, if you're confused of these conflicting signals and you want to learn how to actually profit from this volatility instead of just guessing, this is what we do. We teach a small group of entrepreneurs how to trade these markets in any direction, up or down or sideways, in just 4 to 6 hours a week. So if you want to stop feeling lost and start getting results, click the first link in the description under this video and we'll show you exactly how to do it. Now back to the chart. It's either that the top is not in, but also it could mean that the bottom is not in, because when the pi cycle finally does cross, it could be months from now when we have a huge surge and pump back up to 200,000, 250,000 for Bitcoin. But before then, we could go all the way down to 65K before that happens, for all I know. All the other indicators are showing bear market. If we go back and look at all of the previous bear markets, the drop from the top has always been anywhere from 70 to 80%. 70 to 80% drop from the top. And so far right now, from 126K to the bottom at 80,500 that we hit so far, that's only 36%. So it would be another 36%. I'm not saying that's going to happen, but in order to match the previous drops from the top to the bottom, 77%. I'm not saying that just because we dropped 83% or 77%, or 86% in every other bear market, that has to happen this time. It doesn't. But again, it's kind of like what I said about your best friend picking you up at 6 p.m. every Thursday to go to poker or whatever friends do. They pick you up every week at the same time. Are you going to just say, I'm feeling weird about this Thursday. I don't think he's going to come at 6. He always comes at 6, but I don't think this time he's going to. What you're going to do is expect him to be there at 6 because he's always there at 6. When you look at the history of all of these charts, every single time it's done this, why would we just presume that this time is different? Why wouldn't it just do what it's always done? You know, that makes perfect sense, except for one of these major indicators, the pi cycle top, is not in alignment with the other ones. However, do we put all of our weight on this one or do we put all of our weight on the other one? I would say that the top is not in because of this, but I would say that it doesn't have to be before the bottom comes in. It could just mean that this cycle is different and we could come down here and retest the 70K and bounce and go right up to 250 for all I know. We got bigger players involved over the last couple of years. We got the Bitcoin ETFs, 13 of the largest hedge funds in the world with billions and billions of dollars in. We got multi-billion-dollar international companies that are using Bitcoin as a reserve on their balance sheets. We got governments promising to buy 1 million Bitcoins, our government, President Trump, and states and other countries that are using Bitcoin as a reserve. So there is no reason to believe this time isn't different and that going into this whole new world of digital currency and ISO compliant tokens and the settlements of all the transactions around the world getting switched over to blockchain technology, there's no reason to believe that things aren't about to change. And this whole bull market, bear market stuff could just be coming to an end. And we could have a super cycle, a big pump, a giant pump to the upside when no one's expecting it. Because one thing I have learned over the years in trading crypto is that whatever is the least expected thing to happen is usually what happens. Whatever the majority of the people think is going to happen, they're usually wrong. So to recap, while most historical indicators are pointing to short-term drop, the game has changed. With big players like BlackRock and entire countries getting into Bitcoin, the old rules might not apply, and we could be heading into a massive super cycle. The key is knowing how to trade in both directions. So if you want to learn the system that we use to profit, whether the market is crashing or pumping, doesn't matter. Check out our Crypto Renegades Mastermind in the link below. We'll teach you how to become a profitable trader in 60 to 90 days. And we guarantee you'll make profitable trades in your first 30 days or you don't pay. Click the first link in the description to see if it's a fit. And if you want to learn more about our specific trading strategies, check out the video on the screen right now.